Morning, everybody. It's Tuesday, March 12th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll get to it during the show. Overnight, May corn was down 1.5 pennies at 4.40 1/4. May soybeans were up 3 at 11.82 1/4, and March Chicago wheat was down 1.25 pennies at 5.46. This morning, we had a couple of reports released. CONAB out of Brazil lowered their soybean production to 146.9 and also lowered exports to 92.33. Their corn numbers came back at 112.75. That's about 1 million lower than their previous estimate at 113.7, and quite a bit of difference here between where the USDA is at. We'll talk about that here in a bit. Also out this morning, CPI data, Consumer Price Index. Prices rose 0.4% in February, which was just a tick higher than what the trade was expecting, and overall inflation up 3.2% from a year ago. So basically, folks talking this morning that it feels as though with these levels continuing to increase in the inflation side that we're punting rate cuts further down the road, potentially into midsummer is where they're pricing it at this point. Outside market's not doing much. Dow's pretty much unchanged, up 20 from that data. So kick it off to you guys this morning. Not a whole lot in the way of fresh news. Certainly looking at CONAB and the spread between USDA and where they're at is probably going to catch some people's eyes. But outside of that, not much fresh. Justin, any thoughts?
No, not really. I mean, it's kind of similar. CONAB has been below the USDA for a while now. We saw USDA slightly lower, a few numbers here and there, but we're sitting at 11 million tons, so 450 million bushel difference. Brazilian corn versus the USDA. It's obviously been dry there, still early in the season, and the USDA is usually hesitant to drop things too early. But obviously it's dry. They're going to need to finish off with some good rains. They're entering their dry season in not too long. So, we've been talking about this for a while. I think the second season corn crop, that safrinha crop, will be really important for how our markets shape up. The Brazil bean crops, it's quickly being harvested. And the numbers are what they are. They're not going to change, in my opinion, dramatically from here. Might be a couple million tons up or down. The more important thing there is that they've been just the dominant exporter, undercutting us on the soybeans. Some degree the corn, I think we're starting to get more competitive. So it'll probably depend on what the outlook for that safrinha crop is to determine if we're going to have a summer export market in corn or not. And that'll be a big difference on what our ending stocks look like and the importance of, the growing season for new crop corn.
Yeah, that was going to be my next question. I mean, they did lower exports 92.33. I mean, any thoughts on that side? I mean, it's certainly.
No, I don't. They've been on a record pace. So you have to see how much of that, if it starts to really trail off and we get some late season, export demand out of the U.S. Those are kind of those markets where it could be $1.50 difference in prices. For old crop beans, meaning that if they can go obviously through our, get to that window where you're getting into our gut slot, that, kind of September area where we start to really ramp up, if they can bridge that gap, if they have enough supplies, or if there's a, couple million tons or so that has to flow to the US late summer, that's where you see those kind of really, firework type markets, especially when we're relatively tight, picking up, even a million tons would change the balance sheet pretty quick, at least from these levels, right? We're on a major break, so TBD. But certainly a positive as far as corn and soybean producers here are concerned, that we're starting to lower it, and there's enough concern. Technically turned up, we're kind of hitting our first moving averages as we've talked about. So I think a big inflection point here as far as the market's concerned. There's still plenty of farmers that need to sell, and kind of wondering, is this the bounce that we need to sell, or is something going to continue from here?
Yeah, sure. Jace, I know talking with a lot of growers every day. I mean, what's your overall writing thoughts right now? I'd say farmer sentiment going into planting, and just kind of how this market's setting up right now.
Yeah, I think Justin kind of nailed it, right? Like we've talked a lot about first notice stay low, and we've had a really good bounce out of that, right? And we're bouncing up against these moving averages, so it gets tough from here. There's a lot of things that could change the outlook for the corn and soybean market, right? We got you know, arguably the biggest report of the year come up here in just 2-3 weeks. Could change the whole sentiment of the market. Obviously, the funds are really short corn, really short soybeans. But the farmer sentiment obviously is relatively poor, obviously with prices. I think I think in general, when you read Twitter, you read kind of different forums from farmers. Pretty bearish, right? I feel like they're stuck with too much old crop corn. But a lot of things can change, right? So I think you gotta, I think you gotta reduce risk and take advantages of rallies. Set yourself up for success for next year, right? I think is the best you can do, and take advantage of opportunities. So
That's good points. Guys, I was reading this morning and there's a little bit of chatter. It's Justin, I guess it's a question too, is you get into spring, you start getting field work ramping up and stuff like that. I mean, is there a possibility that you start seeing a little bit of a better basis for some grain, just given that,
Yeah, I mean, yeah,
deliveries will
absolutely.
shut down a little bit?
Yeah, I think so. It obviously would help to get more competitive, like we just talked about with Brazil. So if you get some issues in Safrina, the Brazil farmer kind of steps back a little. You maybe get some export business flowing this way. Our export inspections for corn have actually been good.
Yeah.
We continue week after week to kind of be above the estimates. So there is some movement starting there. And, if, like I said, if there's any kind of worry at the same time that we're planting, I do think, we talked a lot about, kind of the struggles in banking and loan renewals and having to make payments for rent and, all these factors that we've talked about. I do think whenever that is, call it the next 30 days, and that's cleaned up, the amount of bushels that need to be sold to get the loan, all those kind of things work through. And yes, I definitely think stronger basis, maybe a little better markets, from that, call it mid-April to mid-May, June, early June timeframe, kind of more seasonal will work out well. Especially there might be some, I'll call it forced selling, or people that sell that don't necessarily want to, just to meet some cash flow needs and some loan needs. So that's where you could see something a little more exciting. Hopefully, fingers crossed.
Yeah, definitely. Justin, I thought you brought up a good point, and we got Ryland on here this morning as well. About some more, was it the meat packing plants coming online and being approved for Chinese import, or what was that story?
I was going to ask Ryan. I just saw that was it 40 more packer plants in Brazil were approved for export to China.
Yeah.
Is that anything or?
Yeah, these are. Overall, that would be expected. That's where they're gonna source most of their beef in general. Plus, as we kind of spoke about it yesterday, less reliance on the U.S. And this comes at a time where, our beef exports have been pretty lacking, but our imports have been very, very strong, all things considered, just because of the high prices and the lack of availability. But oddly enough, there was a story out about Perry, Iowa plant is going to be closing, and it's a pork processing facility. So, it's about 9,000 head a day capacity. So like we are seeing, and that's even with, pretty good margins, all the packing margins too. So, I don't think it's anything that's really going to change the dynamic that much right now in the beef sector. I think it would be more significant if it was something more pork related, at least as far as.
Why do you think that did close, Ryland? I saw the Tyson plant. Is that the one you're talking about?
Yeah, it's hard to say. I really don't know. I don't know if it was just outdated, if it was an efficiency issue, if it was an overhead issue, or if it was just they found a better location with, maybe some more incentives. It's hard to say. I mean, I imagine that supply is going to get enveloped by the other plants in the surrounding areas, and likely to open a new plant at some point, maybe down the road. But I mean, I don't know the exact reason why they decided to shutter it.
Sure.
Yeah, segueing right in, Ryland, you share a few thoughts with us just in terms of what you've seen cash markets and where we're at on livestock.
Yeah, well, there's not much as far as the cattle goes. We haven't really seen any significant cash trade yet. I mean, it was slightly lower close. We're starting to see a little bit of liquidation. So open interest started coming down a little bit yesterday. I mean, we were down about 1,200 contracts in the live side and about 400 in the feeder side of things. So, people are really concerned about the slaughters just being really light. We were at 111,000 head yesterday, and that's 5,000 below where we were at last week. So, I mean, even though cash is still kind of on the up and up, that is a big concern as we kind of move forward. And I think the real concern is really if we're gonna start backing up cattle, going into these kind of peak demand times. So we'll see. It's kind of a strange dynamic right now. The market's holding a historically high price, high range. So we still want to be really cautious just from a risk management standpoint. I think it makes a lot of sense just to kind of have maybe a little bit of extra downside coverage just in case we really get something that nobody sees coming, or we see another big round of liquidation from the funds for whatever reason. Either it's not appealing or we see maybe a little bit better of a supply. I mean, we know the supply situation is going to last a year or two. It's still going to be tight. Just overall, that there's really no way around that. It's just, can we import our way out of this problem, or our price is going to finally hit that level that is just too high? As they say, high prices cure high prices. Just perhaps we haven't seen it yet. Maybe we have. We'll see how that goes. But at least on that side of things, market's holding up okay, but starting to turn a little bit lower, especially as corn has been getting a lot firmer here. We've been seeing the feeders start to fail a little bit. April just finished under its 20-day moving average. So we're starting to see some of the trends start to weaken up a little bit. So I think that's something to keep an eye on, and just keep a little bit of extra coverage kind of going out forward in the feeders.
That's very good. We're going to be coming into the open. I think one thing to highlight too, and Jace, you maybe piggyback on this point as well. But you got another couple days here before your elections for crop insurance, are necessary to be made. And I know we've been running through a lot of different options and scenarios and trying to get everybody well positioned. So you still got a couple days here. If you need, a second set of eyes or somebody to help walk through some of these difficult decisions that are going to shape up, this year, give us a call, let us know. That's kind of what we've been really heavily focused on. I know there's, different band products that we've been analyzing. We've talked about it a number of times on the show, and just different elections that maybe you're not thinking about that, just talk through. So, still time, you still got a couple days. I know crop insurance agents are running ragged right now, but we can hopefully bridge the gap and help you out in some capacity there.
Yeah, right in these tight margin years, it's important, right, to do your homework. And I think it's, insurance, a lot of people look at, or at least even a lot of agents look at insurances, the likelihood of it paying, right? And I really think you just got to incorporate it into your whole marketing strategy for the year, right? And pick a level of payment or level of guarantee, let's say, that covers you. Make sure that you have that you understand your policies, right? Work with your consultant on how these are going to work in different price and yield environments, and what that means, this spring or summer, if we have some weather uncertainty and some yield uncertainty, and how we can use that policy to build that floor, build that marketing strategy, so that you're, you got all your T's crossed and I's dotted by the end of the year. So
yeah, that's a great point. I mean, we as a fundamental basis, look at levering crop insurance so much throughout the year. It's a backstop of the marketing for a lot of folks. And this year is really interesting because of the levels that you're insuring and having to think outside the box, right? And it's going to be an interesting deal there. But anyway,
well, just to add to that real quick, Dan,
yeah.
we did our farm yesterday, kind of finalized, and just to show that we're doing the same things. It's not a no-brainer. That's for sure. And it really comes down to what is most important for you, when you're looking at those policies, what you're trying to achieve with them. And it's different for everybody. If you're someone that's really hesitant to market, aggressively on these kind of rallies or uncertainties, in my opinion, it's a different policy type than someone that's willing to aggressively sell, and maybe they need bushels to sell against. So it really depends on the personality of the person and knowing how you're going to react in certain things and where your shortfalls are as a risk manager. I think really helps us determine what the right policy is, or your agent. So there's more factors than just, hey, this is the one of the year, this is the flavor of the year that's going to really work. It really has to depend on the person and the intent of how to use it.
Yeah, that's a great point. And then, like I said before, we are here to help folks through those decisions and talk through it and decide, what's the best path forward for your particular operation. Just came into the open. We got May corn down a penny at 440.5. May soybeans are up a quarter at 1179.5, and May Chicago wheat is down 3/4 at 546.5. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Appreciate everybody's thoughts here this morning. I hope everybody has a great day, and we'll talk to you tomorrow.
Thanks, Dan.
Thanks, Dan.